Okay, everyone, again, thank you for your patience. We will get started. Again, I want to thank you for joining today's installment of the Voluntary Benefit Shop's bi-weekly broker webinar series. Today, I'm excited to have Danielle from Trustmark here to talk to us about Trustmark's solution to the long-term care crisis. Trustmark's been a great partner for us. They have a really innovative and interesting life with long-term care solution that has a couple different versions. So it's really flexible, can fit a bunch of different client needs and that type of thing. And she'll be presenting to us today. So we're excited to have her. Danielle, thanks for joining us today. And I'll turn it over to you in just a minute. If you could just jump ahead one slide for me. So guys, again, my name is Mike Walker. I'm the president of the Voluntary Benefit Shop. Most of you know us, but I do see some new names on here that I'm not familiar with. So if you don't, let me give you my 30-second commercial on the Voluntary Benefit Shop. So we're here to support brokers with all of your clients' voluntary benefits needs. We provide, expertise, products, enrollment, and support for all things voluntary benefits. So if you have a client that you are interested in talking about voluntary benefits you can come to us. We'll go out to the marketplace, secure all the proposals, apply our block underwriting offers, make sure it works with the applicable technology or provide technology, and come back to you with a recommendation that we can review with the client. And then once the client says go, we'll handle all the execution of employee education, enrollment, service, etc. So everything from beginning to end. Or if you're just a broker that wants to really maximize your opportunity with voluntary benefits and you want to put some strategy together for that, we can help with that. That's what we do, every day, is help our brokers maximize or monetize their opportunity from voluntary benefits. You have my contact information here on this slide, as well as our website address. Feel free to check out the website. It's got lots of information about us. And with that said, I'm going to turn it over to Danielle so that, Danielle, you can run with it.
All right. Thank you so much, Mike, and everybody. Thank you for your time today. I'm very excited to be here talking about Trustmark and our unique universal life and long-term care solution, as Mike had mentioned, for the long-term care crisis that's happening today. If you have any questions throughout this, I know we're going to have a little Q&A session at the end if you wanted to wait for that, but I'm just going to dive right in. So today's focus really is, who is Trustmark? If you've heard of us before, awesome. If not, I'll give you a little bit of background. We also are going to go over a little bit what happened in the state of Washington, why there is such a focus on long-term care right now, get a deep dive into our Universal Life product, what we have to offer for technology, a little bit about marketing, and then the wrap up with some Q&A. So who is Trustmark? We've been a trusted partner with over 100 years experience in this space, with divisions of several arms of the company, strong focus on VB, however, with innovative solutions offering our guaranteed renewable issue age rated products with our worksite, newly introduced group products as of June last year, and our proprietary and patented product for our innovative solutions, as Mike had mentioned, for listening to the voice of the customer, being a mutual company. We're able to create something that really resonates with our policyholders and gives them the options to make it something that they really want to enroll in. Universal Life events, our critical health events, hospital stay pay, accident, and paycheck protect. For our exemplary service, this is something that we are super proud to be, known as one of the best companies out there for our back of the house. Not a lot can say that. We have customized case training for every new and re-enrolling case, a dedicated implementation team that I'm proud to work with my team every day, day in and day out, whether it's renewing or new. They're a really fantastic team that are super responsive and just always eager to help. Our benefit administrative, wellness, and employee engagement solutions, as we partner with the VB Shop, are just top notch. So we're very excited to have these solutions for you. Some Trustmark fast facts. So of history of us, we've had the universal life and long-term care in this space since 1989. About 650,000 policies in force today, with over 105 cases and 25 million on the books. 60% of our long-term care claimants are under the age of 65. How you ask that number is so high, we're going to dig into that in a little bit. About $750 million are out there in claims. So by no means are we a small shop. We are a pretty significant factor when it comes to long-term care. The full Trustmark product suite for individual or worksite benefits is our Universal Life and our voluntary short-term disability Paycheck Protect. Individual and group products now offered are hospital stay pay, critical health events, and accident. So let's get into a little bit of why there's such a spotlight on long-term care right now, especially what happened out in the state of Washington with the Washington Cares Fund. So what happened? Basically, the state of Washington put in legislation for a new payroll tax unless those had credible coverage. So we really quickly developed a way to work with our partners to make our plan easy to enroll in. It qualified as a long-term care product that you could opt out of that state plan. And we had a multiple of ways to enroll. So either through our Simpling technology, where it's an embedded API, or through our Celerix Engage tool that showed a side-by-side view of what Washington was offering and what Trustmark was offering to make sure that it was the right decision for the employees, that it was affordable, and they knew exactly what they were getting. So for the state of Washington results, what happened after legislation went through and we went through all the enrollment, we enrolled over 100 million in premium with 281 cases, 17 of those over 100,000 employees. Our average participation within those 281 cases was about 41%, which is pretty high for these products. We were very pleased with that result. And many national corporations were able to give this opportunity to the rest of the country as well, where maybe we did the state of Washington initially to get in for the legislation purposes and then roll it out to the rest of the country at a second shoot. So we were able to really market it appropriately when it made sense. So more to come, absolutely. There's about 13 other states that are looking to implement something very similar. New York and California really are top of mind, already submitted legislation and working quickly to get something implemented. Now, we don't have specifics on what that legislation says, but as we do, we will definitely be keeping everybody apprised to what's going on. California, though, this one we do have a little bit of insight on. Seeing the most traction, we have that we know have a dedicated task force. They're recommending no opt-out period, like Washington gave us a few months where people could actually go and enroll in the plan to be able to opt out of the benefit. This time that may not be something that is able to occur. You might have to have something in place before the legislation is even approved. There's also about 40% that feel they should have a reduced program contribution if they have an enforced long-term care product. 40% feel that, like Washington, there should be an exemption. And then there's about 20% that prefer no special treatment, that they should still get the tax regardless. So definitely something to partner with the VB Shop on and Trustmark. We are here to offer this product that we've had in place for so long before legislation comes down. Get your employees used to it, market it properly so that you're not rushing to the finish line before something comes down and then it becomes an issue. So what do we have? We'll get a deep dive into our universal life and long-term care products. And again, why is this in need? So taking a look at some stats here, about 70% of US households with children have trouble meeting everyday financial needs. So it's really a way to think of that financial stability when it comes to if something were to occur. About 70% of people over 65 are going to need long-term care, while 40% of people currently receiving long-term care are even between the ages of 18 to 64. 60% of Trustmark's long-term care claims are under the age of 65. That stat, again, for the second time, I'll go into how that is even possible. So what does the long-term care crisis look like? About 10,000 baby boomers are turning 65 every day for the next decade. You can see by the chart there, it's really starting to even out and the numbers are just continuing to grow. So long-term care with inflation, it's just something that is in top of everybody's mind right at this point. Unfortunately, a pandemic helped with that as well. So what does this hybrid solution look like that Trustmark is able to offer? Long-term care insurance has really changed a lot over the past few years where, a lot of companies have gone out of the market. They stopped offering their product. On a standalone basis, premiums really were hiked up since 2015 by 42%. I mean, that's talk about financial stability. That makes it a little bit difficult. The increase in long-term care premiums sold between 2007 and 17 was about $3.5 billion. And it's just rising every minute at this point. And about 60% of consumers say that they're at least somewhat likely to buy a combination life and long-term care product. So we're happy to know that, it is a needed product out there, and what we have is a really amazing, unique solution. So why else does it make it really important? Employees are leaving their jobs to go take care of somebody who needs their assistance. That's really hurting retention. It's hurting the workforce out there. It's hurting the employees who have to leave their jobs, and then their financial security is at risk. So there's about 53% unaffordable costs paid to help, and 40% can't meet responsibilities due to caregiving demands. So it's really hard on employers as well as employees. So it's really important to have this option available. So Trustmark's Universal Life versus Universal Life Events. Here's a really quick side-by-side. Our traditional Universal Life Events is a flexible death benefit with premium and cash value. The benefits can be received as a death benefit or a living benefit. With our Universal Life Events, it actually gives you a higher death benefit during those prime working years when there's more consequences, and the higher living benefit for the long-term care at any point in time. So what does that really look like? Here's a brief scale to show it's our issue age product. At age 25, assume the cost is $8 a week. You see, for the traditional Universal Life product, it's $51,106. If you were to enroll in the life events where you get more money during those prime working years, it bumps it up to about $78,426. Now, because it's issue age and the benefit decreases as you get a little bit older, for the same cost at about $8 a week, you're looking at about $35,000, call it, for a 35-year-old. Whereas with our Universal Life Events product, still increases it to about $55,000. So our long-term care benefit, that is a rider to the Universal Life product, pays at 4% of the death benefit up to 25 months with a loss of 2 out of 6 ADLs. So example, there is a $100,000 policy for a 35-year-old. It's going to be 4% at 25 months of $4,000. You would be able to qualify if you're receiving professional care from a nursing home, adult daycare, licensed home care professional, or assisted living facility. This kind of helps with that demand of keeping an employee able to be an employee and not have a family member take care of somebody who needs long-term care assistance. So that's one of the reasons that I really do think this product benefits many out there, that you have to have that professional care. So the long-term care triggers, I mentioned 2 out of 6 ADLs or cognitive impairment, confinement for 24/7, receiving in-home care at least a few days a week. One major thing here, which goes along with 2 of the previous slides that I had mentioned, there is no permanency requirement. That's why about 2/3 of our long-term care claims are for those under the age of 65. If there's a chance that you could return to work later on, you're still able to qualify for our long-term care if you have any of those other triggers, and then you may use whatever's left over later on in life. So it's not a one-shot deal where you basically have to be on death's door to utilize our long-term care product. So that is a huge differentiator for us. It makes this plan really unique. There's no permanency requirement.
Hey, Danielle, just to expand on that a little bit, or to clarify, and the reason that Danielle points that out, that's so important, is because there are some of the other carriers in the industry that have products that do have a permanency requirement. And so the fact that Trustmark doesn't have a permanency requirement, as she said, is a good differentiator for them. So I just wanted to kind of just elaborate on that a little bit.
Thanks so much, Mike. Yeah, I appreciate the plug. So how do you maximize the value of our long-term care product? We offer additional riders on the long-term care, such as our death benefit restoration, where it restores that death benefit to 100% immediately. The extension of our long-term care, which our standard policy is 25 months, it extends it out an additional 25 months. So the 2 of those together actually triples the policy value. How do you say? Well, we've got a really great example here. So you can see 4% of the death benefit for 25 months. Let's use that $100,000 benefit example. So the death benefit itself is $100,000. You get paid that 4% for 25 months, another $100,000. You get the additional 25 months then at another $100,000. If you were to pass away month 49 and you've used up all your long-term care, your beneficiary is still going to receive that $100,000. So you've tripled your benefit at $300,000, all the while just paying for a $100,000 benefit. That is pretty significant as well. So even more value adds, we offer the terminal illness benefit of 75% of the death benefit will be paid up to life expectancy of 24 months or less. I know some others could be 6 to 12 months I've seen on some contracts. So our 24-month is pretty beefy there. We also offer easy value. I know some in the industry know it as add a buck. That's something we can work on a case-by-case basis, but basically it's for inflation purposes. It increases the benefit based on the dollar amount of $1 up to 5 years per week. So they would increase about $52 every year, and you can opt out of it or opt in. Lots of different variations on that. So it's also why it's a case-by-case basis to talk about easy value. So real brief technology overview. We have our embedded API solution that I briefly mentioned earlier. These are just some of the systems that we do integrate with today. A few of the heavy hitters are Employee Navigator, Ease, bSwift, Paylocity. Little caveat there, has to be on the bSwift platform. So as we go through opportunities through the VB shop, we like to say, hey, what benefit admin is it on, so that we're able to make sure we set it up, the correct way, whether we use our internal Solaric system or we use our Simplink system. This is extremely easy. The systems talk back and forth to each other. There's no extra EDI file feed builds. Very simplistic, and it's a really great seamless enrollment for your employees and clients out there.
Hey, Danielle, can I ask a question on that as well?
Absolutely.
And everybody, I forgot to mention this in the beginning, everybody, but you can put your questions into the chat, and at the end of this, we'll pull the questions out of the chat. So if you do have questions, feel free to put them into the chat. But Danielle, on the Employee Navigator, number one, I think you're underselling it a little bit. So number one, on Employee Navigator, and maybe on Ease too, but I know for Employee Navigator, a lot of the other carriers will say that their plan is compatible with Employee Navigator. They'll say that their plan is in Employee Navigator Workplace or whatever they call it, the marketplace, the Employee Navigator marketplace. And we work with those other carriers. So so we love you, but we love them too. But one thing that's great about Trustmark is that the integration there with Employee Navigator is greater than the other carriers. And what I mean is this. If I understand it correctly, and I've seen it work before, is that on Employee Navigator, because of the way you guys have the integration, the underwriting questions can actually be asked through Employee Navigator with the way you guys are set up. That's not the case with any of the other carriers that have this type of product, right? And so maybe that's not a huge deal year one, although I think it is, because with spouses, the GI is not that great and that type of thing with the other carriers. But it's certainly a big deal years 2, years 3, years 5, et cetera, because if it's building Employee Navigator, you're going to know it's in their marketplace, so to speak. If it can't ask the underwriting questions, then you still have another step, for employees to enroll. They still have to ask those underwriting questions, right? And so it's a whole nother step versus with Trustmark, since it's integrated with the ability to ask the underwriting questions, it's a more seamless enrollment process.
Thank you so much for that as well, Mike. And yes, absolutely, that is the way that it works. And I just haven't personally seen those other systems, so I like hearing the input for others that have used them before, because that is a differentiator for us, but not actually seeing a side-by-side comparison what other systems look like compared to what we have. I know ours is amazing, so happy to hear it from somebody else too. But that is exactly right. So our systems, they do talk back and forth, as I mentioned. So if we were to go through the initial implementation, we pull the census data from Employee Navigator. That loads into our system. The employee would go in through Employee Navigator to enroll, and the URL never changes, though it is our internal system that plugs in our plans. So that's why we're able to ask the questions and get the enrollment through our system that way as well. So as they're going through, they can do core benefits, medical, dental, and then throw in the universal life and long-term care, make their elections, answer any MGI questions or whatever that may be, and then just keep moving right along. So as I said, completely seamless for the employee experience.
Thank you.
Yeah, absolutely. Thank you for that. So then just heading towards the end here, we've got a really easy case implementation slide. As I mentioned, we have our specific team. So my implementation manager, as soon as a case sells and we move forward, they would reach out within 48 hours to get an implementation call set up. And this is just, primary situation, give a 60-day timeline here. We know not all work in that manner, so we're definitely flexible. So don't let this scare you. But we just have a really great solution how to implement a case quickly and simply. So talking about our universal life product advantages, as we mentioned, it's a true long-term care rider. So that's why we were able to offer our benefit out in the state of Washington and really looking closely at those additional states looking to pass legislation. It's an indemnity plan versus a reimbursement model. So you're not submitting receipts to us to get that payment. You still have those triggers. You have that professional care. You're going to get the payment. The no permanent chronic condition requirement is still a huge benefit for us, and available to pay in all 4 caregiving situations. The rider doesn't have any separate pricing. It is all in one lump monthly sum, or however you get your payroll deductions. The restoration is paid 100% from day one. So as I mentioned, if you were to pass away at any point in time, your beneficiaries are going to get 100% of the death benefit. And we are priced out to age 100 on these policies. So positioning points, how would this work for you and taking this to market? With the VB Shop, it's a hybrid solution that makes it very affordable for coverage for an employer's population with guaranteed issue underwriting. Long-term care solutions out there are typically individually underwritten, makes it very difficult to get the enrollment pushed through, much less answering all the questions and getting qualified for the care that they need. For a highly compensated rank and file, in addition to a long-term care offering, our product is very, very simple. So payment on 100% of policies, the LTC, the death benefit, or both. And for interest for employees, it's never been greater. Like I mentioned before, the pandemic did shed light on this. And now with other states implementing something similar, it's just easy to talk about long-term care and our hybrid solution these days. So that is about it for me. I know we've got some time here. I think we have a few minutes to answer any questions that you may have, but there's my contact information. By all means, reach out to Mike and his team, or feel free to give me an email with any questions that you may have. But I'll let Mike take it from here.
Chelsea, do we have any questions in the chat?
No, Mike, we don't.
Okay, guys, I'll hold on just for a second to see if anybody has any questions that they want to enter into the chat. Feel free to do so now. If Danielle, if you could just advance ahead one slide. Guys, we have one upcoming webinar, taking a break for September, but have some webinars coming up in the month of October. We have the team from Parento on to talk about how to I'm sorry, we have Mike from Will on to talk about their program, about how to rethink care and make it work for you. So be able to make sure you mark that on your calendar, October 13th at 11 a.m. for that webinar. With that said, let me see, does anybody have any questions they want to enter into chat at all?
We don't have any right now, Mike.
Okay. One more slide, advance, Danielle, and then we'll wrap it up. So guys, again, I'm Mike Walker from the Voluntary Benefit Shop. If you do have any questions on this topic or on anything else voluntary, feel free to reach out to us. Again, you have my contact information here. We're here to help you with all of your voluntary benefits needs. And we handle the whole process from beginning to end. So please reach out to us if you need assistance. Danielle, I do want to tell you that while we were on this webinar, I did have an email came in that from a broker that said, hey, they want us to implement Life with LTC in this 700 person case, and Trustmark is who they want to use because of the integration with eNav.
All
So
right. I love
yeah,
it. Yay.
I know I shouldn't be looking at my emails while you're doing your presentation, but I was catching up a little bit,
It's all right.
and
You know what I'm going to talk about.
I think you're copied on the email too. It was from Bill in my
Oh,
office. So
I
so
took off my email so I could focus on this
yeah,
presentation, but that's very exciting when I pop it back
yep,
open.
yep. So good, good. Hey, and actually that case is a New York case, and so we didn't touch on this on the call, but
Right.
everyone, if you have cases in New York, there's very few carriers that have a solution in New York, and Trustmark is one of two that I know of that have a solution in New York. So definitely, if you have cases that are in New York, Trustmark is one of the only ways that you can address this need. So just FYI.
Thank you for that. And
Okay.
I'll even throw out a little extra to that. If they can cite us outside of that or have a large population in New York, but are headquartered in another state, we have additional riders that the entire population across the country can get, including those in New York. Whereas if we cite us it out of New York, it's a little bit more limited. So that's absolutely a case by case discussion to be had as well, but very exciting opportunities on that.
Okay, everyone, I appreciate your time today. Thanks so much for joining us for this installment of the Voluntary Benefit Shop bi-weekly webinar series. We do have a question coming in from Mark. He's asking, what are the employee count group minimums, Danielle?
Oh, good question. 100 plus eligible at this time. I know we're looking to come down market eventually next year. The date's been pushed around a little bit, so don't hold me to it. But right now it's 100 plus eligible with a 10 app minimum or 20% for MGI or for GI. And we'll work with you through the VB shop on our block offer that we have with them.
Any other questions? Okay, thanks, Mark, for the question. Hey, everyone. Again, I want to thank you so much for your time. We're right at 11:28, so almost up to the time frame. Appreciate everything. Danielle, thanks so much for joining us today. We appreciate it. And everyone, just keep an eye out for our upcoming webinars. Thank you so much.
Absolutely. Thank you for having me. Bye-bye.